I was, wow, this is pretty interesting. This could be transformative. And I said, Art, how big could this be? Back when it was $250. And he said, well, how big is the U.S. monetary base? So back then it was $4.5 trillion. Today it's $7.5 trillion. That should tell you something. And he said, well, there's your answer.
Don't forget to subscribe, traders. Let's continue with the interview to analyze it later and also comment on some of the most important news of the day.
This takes us back to our early days with Bitcoin. And in learning about it and writing our first white paper in 2015 in collaboration with Art Laffer, when he read through the white paper, he said, whoa, wait a minute. This is what I have been waiting for since we closed the gold window in 1971. He said, I have been looking for a rules-based monetary system. And he was, fascinated by it, and increasingly so. Rod, you've met him. He's in Tennessee as well, Nashville. And he's so excited about the idea that we could be returning to private money and to get the Fed out of the equation. Now, I can tell you as an investor in the equity markets, the idea that Fed Chairman Powell can come out and all of the other governors can come out and say boo, and the financial markets freak out. Everybody freaks out because what they're saying is it's really been quite disruptive, and increasingly so in the last few years. So this idea of, a global, digital, decentralized, private, no government oversight, rules-based monetary system is a pretty provocative, profound, having been through many cycles since the late 70s when I was in college, but I entered the financial markets at that time. And, I just saw money unhinged in my early days, and have been a student of, well, okay, how do we change this? And so when we stumbled upon, everybody stumbled upon Bitcoin, or at least I did. And I was, wow, this is pretty interesting. This could be transformative. And I said, Art, how big could this be? Back when it was $250. And he said, well, how big is the U.S. monetary base? So back then it was $4.5 trillion. Today it's $7.5 trillion. That should tell you something. And he said, well, there's your answer.
Bitcoin's emergence has sparked profound discussions regarding its impact on the traditional monetary system. Art Laffer, a renowned economist, has expressed enthusiasm for the concept of a rules-based monetary system facilitated by Bitcoin. The allure lies in the decentralized nature of cryptocurrencies, which operate independently of central authorities like the Federal Reserve. Laffer's excitement stems from the potential for Bitcoin to offer stability and predictability, qualities often lacking in fiat currencies subject to the whims of central banks. He envisions a landscape where monetary policy adheres to predetermined rules, reducing the uncertainty inherent in discretionary central bank interventions. This shift towards a rules-based approach could mitigate the volatility and economic distortions often associated with fiat currencies. However, discussions surrounding Bitcoin's impact extend beyond mere excitement. There is a recognition of the disruptive potential inherent in challenging the hegemony of traditional central banking systems. The Federal Reserve's actions, particularly its use of unconventional monetary policies like quantitative easing, have raised concerns about market distortions and long-term consequences. Bitcoin represents a provocative alternative, offering a decentralized framework immune to the arbitrary decisions of central authorities. The concept of a rules-based monetary system, enforced by blockchain technology, introduces a paradigm shift in how we perceive and manage currency. It challenges the status quo, prompting a re-evaluation of established norms and paving the way for innovative solutions to age-old monetary problems. In essence, the discussion surrounding Bitcoin transcends its role as a digital currency. It embodies a broader debate about the nature of money, governance, and the future of global finance. By exploring the potential of a decentralized, rules-based monetary system, we confront fundamental questions about power, trust, and economic stability in the digital age.
And so we've been running with it ever since. Could it serve the three roles of money? That was our first white paper, and we concluded yes. Could it? Is it ringing the bell for a new asset class? Yes, but in terms of this monetary system idea, the halvings, this one coming down from 1.8 to 0.9, is taking the growth rate of the Bitcoin supply below the long-term average of gold supply growth. And but the difference is, and when I say this to people, it's an aha moment for them. The difference is when the gold price goes crazy to the upside, miners come out and start mining more, and send the supply growth up. And when I tell people, in the investment world, that's not possible with Bitcoin, it's just not possible. Again, they do a double take. And so here we are for the first time below the growth rate of gold. And as Stan Druckenmiller says, well, gold is a 5,000-year brand. That's what he says, at least how he says it. Bitcoin's a 10-year brand, and I should pay closer attention to it. And I think the halving is another one of those aha moments. I think in the and Yassine, you can corroborate this, but in the financial markets, because the spot Bitcoin ETFs have been approved, and there's been, I don't know, how much is the net new, Yassine? I don't know, it's billions have come in. And these are people who, many who probably were not in the last halving and or in Bitcoin during the last halving. So it's going to be, and they come in saying, oh, with the halving, that means Bitcoin, the Bitcoin price is going up, because they saw it in 2017. There was a little bit of a wobble before it happened in 2021. So there are expectations built into the financial market. This is a great thing, and Bitcoin's going to go up because of it. But we have a whole new layer or kind of player in the Bitcoin ETF, and it'll be interesting to see their reactions if this doesn't go as planned. Oh, halving, and then it goes up.
In recent times, English insights on financial markets have been particularly attuned to the advent of Bitcoin exchange-traded funds, ETFs. These financial instruments, specifically those based on spot Bitcoin, have generated significant attention and speculation within the investment community. The approval of such ETFs has catalyzed a substantial influx of capital into the market, amounting to billions of dollars. This influx has been pivotal in drawing in a new wave of investors, marking a notable shift from previous market dynamics. Central to the discourse surrounding Bitcoin ETFs is the anticipation of their impact on the price of Bitcoin itself. Market observers have been closely studying historical patterns and the prevailing sentiment within financial markets to gauge the potential trajectory of Bitcoin prices. There exists a prevailing expectation among many investors that the introduction of Bitcoin ETFs will serve as a catalyst for a surge in the cryptocurrency's value. This expectation is rooted in the belief that the accessibility and legitimacy conferred by ETFs will attract a broader investor base, thereby driving up demand and subsequently prices. However, amidst these expectations, there is also a recognition of the inherent uncertainties and complexities introduced by the introduction of Bitcoin ETFs. The emergence of these financial instruments adds a new layer to the dynamics of the market, potentially influencing supply and demand dynamics in unexpected ways. Consequently, there is a keen awareness among market participants regarding the potential for outcomes to diverge from prevailing expectations. In such a scenario, various reactions and adjustments within the market are anticipated, underscoring the need for vigilance and adaptability among investors. In essence, the English insights on financial markets regarding Bitcoin ETFs reflect a nuanced understanding of the interplay between regulatory decisions, market sentiment, and price dynamics. While the approval of spot Bitcoin ETFs has undoubtedly ushered in a new phase in the evolution of cryptocurrency markets, the full extent of their impact remains subject to ongoing observation and analysis. As investors navigate this landscape, they do so with a keen awareness of both the opportunities and risks inherent in this emerging asset class.